Hey guys, welcome to my channel Investing Untangled. Hope you're all doing well today. So on this channel, I post content about business and stock market research and detailed stock analysis. And if this sounds interesting to you, please subscribe to this channel and hit the notification bell to get updated whenever I upload a new video. In this video today, I'll show you how to find undervalued stocks for yourself. I've been using a number of tools and resources that I'll share with you today. There are thousands of publicly traded companies in the US, and it can be very hard to find a handful of companies for yourself which will offer you great returns in the future. I'll show you how I do it and how these tools actually work. So let's check them out now. Okay, the first tool that I'm going to share with you today is this website called Jitta.com. So I really like this website because it actually ranks different companies and gives them different rankings based on different parameters, and we'll just see which parameters they are. So you can actually pick up a company from any geography you want. You can, for example, go to United States, and I majorly invest in the US, so I check out US companies. And these are all the companies that are listed here, and you can see this is the Jitta score, and the higher the score, the better the company is. So better in the sense that it has more consistent earnings growth, more consistent revenue growth, etc. You can actually use their screener if you go down here. So you can screen companies by sector, for example, whatever you want, or by Jitta score, and this is generally what I do. So I generally invest in companies that have a Jitta score of 6 or higher. All the companies that have a lower score have been eliminated, and these are the companies that I'm interested in. And then I also choose this option called the Jitta line. So the Jitta line is this dotted line here as per the analyst doing the research behind this website. So this dotted line represents the fair value or the intrinsic value of the stock, and I generally invest in companies where the stock price is below this dotted line, and you can see that here. So wherever it's green and it says under Jitta line and this is the percentage, that's where you know that the company is undervalued. And I generally go for undervalued companies, so I'll keep it to 0 here. So this now will show me only undervalued companies. And now if you go to one specific company, let's go to this one, D.R. Horton, and it will pull up the page of this company. So these are the parameters that determine the Jitta score. So you have growth opportunity, you have recent business performance, financial strength, and all these other parameters. And here you can see how this company has fared on the Jitta ranking across different years. And here you see the actual Jitta score. And I generally am interested in companies which are trading 25% or lower than this Jitta line. So this means that the company is undervalued. So I actually have found that this website is very interesting, and it is a very handy tool, and it's all for free. And if you go to the fact sheet here, so this gives you numbers from so many different years, all the way since 2012, you get all these numbers. And here you see what they are: revenues, earnings, dividends, etc. So you have basically all this information right here, which I really like. And finally, if you want to access financial documents, you can also access them right here. And here you have the income statement, the balance sheet, and the cash flow. So the next thing I use is traditional screeners. So I generally go to Yahoo screeners, and Yahoo generally has these inbuilt screeners. I use the undervalued growth screener. And if you go to Yahoo Finance, go to screeners, you will find all these inbuilt screeners. I go to undervalued screeners. So I'll add debt to equity, current ratio, and return on equity on top of this undervalued growth stock screener. So now this will be a company which is at a cheaper price because its PE ratio is between 0 and 20. Its price to earnings to growth, so the PEG ratio, is lower than 1. And its 1-year percentage change in earnings is higher than 15 to 25%. So I go for something like 25 to 50% or even higher. So this shows to me that the company is growing very fast, and it is at a discount right now because its PE ratio is low and its PEG ratio is low. And I screen them also on their financial strength. So debt to equity, I wanted 70% or lower, and current ratio, meaning it can cover its current liabilities very easily, I wanted greater than 1.5. And finally, how is the company management doing? So what kind of returns are they generating? Here you can see return on equity, I like greater than 15%. So now if I say find stocks, you'll see that there is a list of all these companies that pop up, and these are the companies that I'm interested in. And here you can see actually D.R. Horton, the same company that we were checking here, with Jitta also appeared here. So this is how I quickly find companies, and then whatever I get really interested in and a sector which I understand well, then I start researching those companies in detail and figure out if that is a good investment opportunity for me or not. So another tool that we'll look at today is this website called Dataroma. And I really like this website. So this basically compiles all the 13F filing data of super investors, so to speak. That's here, that's what they call them. So these are very, very famous investors that basically manage a lot of money, and as per American regulations, American government regulations, they have to have 13F filings with the Securities and Exchange Commission in America, where they have to list all the holdings that they have and all the moves that they made. And this website, dataroma.com, compiles all this information free of cost for us. It doesn't charge us anything, and you can quickly check out what your favorite investor is doing. For example, you can look at Warren Buffett here, and if you click on Warren Buffett, you will see what he has been investing in the third quarter of 2020. So it gives you the portfolio date and the period, which is third quarter of 2020, and these are all the holdings. And here you can see all the companies that Berkshire Hathaway is holding, and here it's also the percentage of these companies in the portfolio, the number of shares, actual number of shares, and the recent activity. So this is also very interesting. So it actually shows you if Warren Buffett sold something, if he bought something. For example, in the third quarter of 2020, he reduced Apple, so he sold 3.7% of his Apple holdings, and he bought these pharmaceutical companies, Merck, AbbVie, and Bristol Myers Squibb, in the third quarter. So here you can see what these famous investors are doing, and you can get some ideas of what stocks, what companies they are interested in, and you can start researching those companies also. And what I also like on this website is this information right here, the top 10 most owned stocks. So this basically ranks all these companies based on their holdings in these super investor portfolios. So you can see Facebook is number 1 here. So if you click on Facebook, so the website gives it a rank. So you can see ownership rank is number 1. 30 super investors have been interested in Facebook and have traded Facebook in the third quarter. And then if you come down here you'll see all these portfolio managers, all these super investors who have actually held Facebook, who have been buying or selling Facebook in the third quarter of 2020. So this gives you an indication that Facebook is a company that you might want to look into. And this is how you can find also stocks which are very interesting, because these are superstar investors and they do very extensive research to find their investments and companies that they want to invest in. And what you can also do here is that you can actually type the ticker of a company. For example, I have the ticker of Google here, and if you hit these arrows, it will take you to Google ranking, and it will show you that the ownership count for Google is 26, ownership rank is 3, just a little below Facebook. And here are all these people who have traded Google in the third quarter of 2020. So moving on, I'll show you another website that I use to find undervalued stocks. It's called Magic Formula Investing. You have to create an account here, but this information is also freely available after you create your account. So this website has been built by Joel Greenblatt, who is a very famous value investor. So this website has been built on parameters that Joel Greenblatt described in his book that he published in 2005. It's called The Little Book That Beats the Market. And since then, he has actually written a couple of more books, and I highly recommend his books. He describes his strategies and how he ranks different companies. So for this website, the way it works is how the algorithm actually ranks these companies is on the basis of 2 parameters, and they are return on invested capital and earnings yield. So earnings yield is the inverse of PE ratio. And the higher the earnings yield is, the better it is, and that means the cheaper the company is in relation to its earnings. And the next parameter is return on invested capital, and the higher the returns on invested capital are, the better it is for the company and for the shareholders. So this website actually ranks these companies based on these 2 parameters. Both the earnings yield and the return on invested capital should be high enough for the companies to be listed high up in this ranking system. And what you can do is you can actually select the market cap yourself, and you can select the number of stocks that you want. So I keep it at 30, and then you can hit get stocks here, and it'll give you this list of top 30 companies with really high earnings yield and really high return on invested capital. So these are some of the companies that you can look into then and figure out if you're interested in them, and if you want to invest in them, you can research that further. So these tools that I've described to you so far, I use them just to quickly get a list of companies. So it doesn't mean that I invest in all those companies. It's just to get a narrow list of companies that I think are trading below their intrinsic value, and these companies have great growth potential going forward. And then I select a handful of these companies and start researching and seeing which ones will be a good investment opportunity for me. Okay, now moving on to another website that I use. It is called the Value Investors Club. So just like Magic Formula Investing, you have to make your account here and then you have to log in. All the information that you get here is free. So this is also specifically built for value investing opportunities, meaning companies that are trading below their intrinsic value. And this pulls up a page with ideas that people have posted here of companies that they think are trading below their intrinsic value, meaning that they are at a discount price right now. And if you go to any company, let's say Albany International, so I don't know this company, and here you can actually read up everything. So they give you all the specifics up front, why they think that this might be a good opportunity, and then they describe it in a pretty detailed description. So these are all the tools majorly that I use to find investment ideas, to find companies that are undervalued and that might be presenting a good investing opportunity. So these are all the tools that I use for my own stock research, and I hope some of them will be useful to you too. If you found this video useful for yourself, please consider leaving a like and subscribe to my channel Investing Untangled. That'll support my channel a lot. I'll be posting new videos about the stocks that I'm currently investing in and their complete analysis. So stay tuned to my channel and I'll see you in my next video.